Here. I'm going to start with Gareth. You're sitting the closest to me. We're going to break this panel up into two parts. First, your outlook on the cryptocurrency space, and in particular Bitcoin, and a little bit of the altcoin space as well. And then exactly how to execute on these projections, exact trading strategies that you use. You all have different methods and strategies that you utilize. Bot trading and technical analysis, of course, mixed with a bit of fundamental. So Gareth, you and I have spoken many, many times. $6,000, and I believe Florian, your call was $6,000 potentially to the downside. But you've become, both of you have become slightly more bearish since the last 2 months since we've spoken. Now, Gareth, you're saying that the maximum downside for you was 3.5K, right? Expand on that.
So I think the key is as a technical trader, you're always getting new information from the charts, right? And so every time you see a candle on the chart, it gives you a new piece of the puzzle. So you have to always be updating your analysis. And I think it's important to recognize that you can't be rigid. Like a good trader is ready to pivot because for all I know, we could not go down there and we could start moving to the upside. And I need to be able to jump on board when that time does come. Now, the 3,500 target I have is a worst case scenario. I hope it doesn't happen. I'm extremely long-term bullish on Bitcoin. I think it's going far, far higher, but we have to recognize that we are in a cycle, right? And to me, this is the same as the dot-coms. And some of you guys may be old enough to remember the dot-coms. It was the beginning of my trading career, and we saw stocks like Amazon drop 95%. Now, since then, it's gone up tens of thousands of %, but you have to have these cycle flush outs, right? And so that's exactly what we're in with crypto. It just needs to wash out kind of the dead stuff. It's very Darwinian, if you will, in that the strong will survive and thrive, but you have to get rid of the junk. And so again, when the junk's getting hit and going to zero, Bitcoin does take a hit, but it will ultimately rise, as will ETH, as well as other crypto coins as well.
Okay, before I move on to Florian, I do want to comment on the two critical assumptions you've just made, because you said that Bitcoin could act like Amazon during the dot-com bubble of 2001. Okay, first of all, the assumption is that Bitcoin behaves like a tech stock, using Amazon as an example. And second, our current environment is similar to that of 2001. So comment on both.
Right. So number one, the way that the dot-coms rose was so much the same as the way crypto. I mean, you had companies in the dot-com era that were run out of their parents' basement that got tens of millions of dollars in valuation. I mean, it was like a joke, right? But because it had the name .com, it had this crazy rush in. It was a penny stock. It was trading at a penny, and it went to 5 cents to 25 to $1 to $5, right? So all that is very similar to things like Dogecoin, SHIB, and some of these other things that we've seen out there in these projects that probably shouldn't be around. And so it's very similar in so many ways. And remember that the similarities, it's people, so crypto, blockchain technology, different from .com, but you know what? Who's buying? Who bought .com stocks? Who bought crypto? People. And so charts are representations of humans buying and selling, and therefore it's ultimately the same, right?
People and bots. We'll get to Aaron's bots in just a bit. Florian, can you respond to Gareth's comments about the tech outlook, and fill us in with your macro outlook as well, and the forces that are strongest, you think, right now in the economy that'll push Bitcoin down to, I think your forecast was $6,000 to the downside.
I said 10, worst case 6 right now, but as Gareth rightly pointed out, I mean, you always have to reevaluate, see what the charts are saying, see what the macro picture is doing, and then you have to change it sometime. And maybe if you're lucky, you make a call 2-3 years ahead. You never know the future, of course. I think we are in a crypto winter right now. There is no doubt about it. It's my 3rd crypto winter I'm in. Usually they last 20 to 27 months. And recalling it from the last one, I remember when Bitcoin basically traded sideways around the 6K level, and then suddenly, I think November 2018, it dropped nearly 50% within a few weeks. Something similar seems to be setting up on the charts right now. So once we break those, let's say 18K, I think it's quite likely that Bitcoin is going to around 10K. There's an open gap in the Bitcoin future. So that's my target right now. Worst case would be the 6K, but we have to reevaluate along the way.
Sliding as you speak, Florian. 18,495. It's going down. Check your
Can I
phone.
just interject here? And just one thing I think is fascinating. So last year I was on this stage with you, and we talked about it was 65,000 on Bitcoin at the same conference, same stage, and I said it's going to go to 20, right? And the amount of eye rolls that I got in that audience at that time was incredible. I did not see one eye roll this time, so thank you guys.
That's not an invitation to eye roll, but you can if you want. Okay, so Aaron, before I jump onto you, so raise your hands if you actually have a short position on Bitcoin right now active.
I would have to check my bots, to be honest.
You have to check your
I don't
bots?
even know, but most likely yes.
Florian
if
and-
it drops to 18.5, then yes.
Are you guys short, Florian?
I'm not short
Are you-
Bitcoin right now, no.
No, I'm not short neither. I'm actually completely at the sideline right now.
So
for
you're
many months
just
already.
waiting for it to drop to your minimum downside target. And we're going to get to that. Okay, so Aaron, talk to us about your targets. Yeah.
Yeah, I mean, the rosy scenario, the happy scenario in my mind would be, we're looking at 2018, which is the most recent bear market that we've seen. And I vividly remember that drop from 6K to 3K, mainly because everyone is saying it could never drop below 6K. 6K is the floor. It's going to bounce. And you saw it bounce so many times, just a little bit less, until crack. And when I started comparing the charts to 2018, there are those similarities. We saw Bitcoin go down to 17, then all the way up to 25, and then find support, and find support, and find support. Something that I learned from Gareth is that the more touches there are on any trend line, the weaker it becomes every single time. It's almost like you talk about in the courses, you talk about like beating down a door. Like if the building is on fire, a fireman's there trying to beat it in, and eventually the door is going to give way. So my downside targets, if things are, so I said rosy. Let's talk rosy, right? This is what we all want to hear. If what I'm seeing right now is a correlation to 2015's bear market, where there was a flush out, went sideways, went up, and we've kind of done that. We've come down again, and I think it would make sense to see another drop, but it's tricky. But I'd like to see a drop down to 17.5 to come back up, and then we kind of float, just to psych people out. The thing about, and we've talked about this before previously, but Bitcoin is notorious for doing the opposite of what everyone is hoping and expecting it will do. Therefore, as a trader, it's psyops. It's messing with my mind every time. So that's why I default to bots, because the bots are just running off of algorithms and calculations. It's not running off my emotions or my gut feeling. So like I said, if it's actually at 18.5, I probably have a short position open for several pairs. Yeah.
Okay. I do want to move on. So two-part question. Address both parts, please. So first part, on the correlation with the tech stocks, why is Bitcoin still correlated with the tech stocks despite all the fundamental factors that you think would make it uncorrelated? When do you think this decoupling could happen? Okay. That's the first part. And second, one could argue the tech sector right now has been beaten down to such an extent that a rebound is due to happen. I mean, the Nasdaq's down 22%. Individual stocks are down 90%. If you look at certain stocks, we've already seen 2001 is some of the arguments that I've heard. Therefore, assuming everything else is equal, Bitcoin should see a rebound if the tech stocks rebound as well. So correlation, why is it still here? And are we going to see a rebound anytime soon? I'm just presenting a counter to your downside target.
All right. So I think the key here is understanding that the tech stock correlation is because it's a new asset and it's considered a risky asset, right? So just like tech stocks can be looked at as risky, you have that same correlation. When people get scared, they're going to sell tech stocks, and they're also going to sell some cryptocurrencies.
Stop in here, but how do you define new? I mean, Bitcoin's been around for 13 years already.
13 years, right?
That's nothing though, right? I mean,
stock market. I mean, you compare it to, you have to compare it to these other assets out there. So what I always like to say, and I say this a lot, is that, it's 13 years old. All right, how many of us have 13-year-old kids? And mine aren't quite that old, but how rational are they at 13? So don't expect Bitcoin to act rationally like gold. And
do their emotions correlate with the Nasdaq?
What's that?
Do their emotions correlate with the Nasdaq?
We got to start tracking that. All right.
Good. All right.
I know mine do somewhat. So
Florian, jump in here.
Well, I think it's all depending on liquidity. After 50 years after the end of the gold standard and basically 20 years after the burst of the internet bubble, the whole markets have become so addicted to liquidity from the central banks. And it's all connected, it's all correlated. And since the Fed has become so hawkish, driving up interest rates and trying to take liquidity out of the market, it affects every and any sector, and especially the most speculative one, which is the crypto sector and Bitcoin. So that's the main reason why they are so correlated. Overall, if you look back, the last financial crisis, 2008, 2009, since then, tech stocks had an unbelievable run, but Bitcoin had an even stronger run. But they've been basically going up together all the time. Yes, Bitcoin did its own thing at the same time as well, but overall, the trend was up in everything because there was so much liquidity coming into the market, and now you have a different Fed, basically, and that's the first time for Bitcoin, and that's why we will have to learn and figure out how Bitcoin really behaves in a liquidity crisis. And so far, the last 10, 11 months, it's been basically going down. We had only a few little bounces. Yes, it's oversold. Yes, it could always bounce a few $1,000s. We've seen it over the summer. It could also go back to the 200-day moving average, I think around 26K, and it still wouldn't change the picture at all. So unless we're going to see a policy change again, we are in a bear market in everything, and that affects crypto.
I do want to move on to trading strategies. Aaron, before we talk about bot trading, because that's very interesting, let's follow up on your train of thought on correlations. Now, a slightly different question. Bitcoin's correlation versus the rest of the altcoin space, specifically the top 20 coins. There's this argument that the top 20 is just a high beta play on Bitcoin. Is this always true?
Well, I mean, Terra Luna for a long time was number 7. So, I mean, just because a coin is up in that top 20 rank.
Well, Terra Luna is not supposed to. Okay, right, I understand. Okay.
But I mean, that's the point, though. I mean, Bitcoin and Ethereum, that's what you talk about a lot. That's what I talk about. People ask me, what coins should I buy? I can't tell them, but it makes the most logical sense to talk about Bitcoin, because in 2020, in November, when Bitcoin is really getting bullish, people were talking about it. People weren't saying, oh man, I can't wait to buy some burger coin or cake. It's like no one, I mean, yes, maybe on TikTok, that's another thing. But when people would ask me, how's your Bitcoin doing? My mom, I love her. How's your Bitcoin doing there? Like that GIF, like that little meme or whatever. It's true, but that's really important. People don't really understand what Ethereum does or is. The people in this room do. So for me, when I'm thinking about the top 20, Bitcoin is the leader, much like the S&P is a leading indicator. Not all the tokens in the, crypto speak, not all of the stocks in the S&P are going to do the same thing all the time. In the same way, not all the tokens in the top 20 will do the same thing. One thing that I've learned over the last 5 years or so being trading crypto is that when Bitcoin is doing what it's doing right now, it provides a lot of leeway for alts to fly. And this is trader talk, but essentially when Bitcoin is stable, traders get bored. So they take that Bitcoin and typically they buy other things like Ethereum maybe, but more speculative coins below even the top 20. And especially when there are very captivating, exciting news events like the whole XRP case, which maybe will end soon. We saw that run from like 35 cents up to almost 50 cents, which is a great run, and nothing else was moving. So because Bitcoin is stable, it's losing attention. But the fun part is that when Bitcoin does make a move, either to the upside or downside, typically all the alts suffer, at least initially, because everyone's caught off guard. If you're trading with Bitcoin against XRP, Ethereum, those values can't keep up. The price of those tokens can't keep up with Bitcoin, therefore it falls. So you have to be careful, especially because we're just doing nothing. So it does provide opportunities for trading, but short term, like we talked about recently. It's all about this mindset of trading in taking short-term profits real fast, at least to secure your profits.
Okay, Aaron, let's continue with you and talk about trading strategy, specifically bot trading. You told me offline one of the advantages of trading with bots or algorithms and completely automating your process is that you're not susceptible to emotional outbursts. Everything, I'm paraphrasing here. Yeah. I mean, I'll let you explain how that works. The downside, of course, is that sometimes, as Gareth might explain, utilizing your emotions and triggering your instincts might actually be a good thing, right? You're missing out on that, but I'll let you comment on your strategy.
Yeah, so to me, the reason why I favor bot trading so much is because I know myself pretty well. The Better Traders, my company, our first product was a trading journal. So I care a lot about trading psychology, following set rules, tracking my performance. How did my winners do? How did my losers do? Why did that happen? So I've learned to be aware of my emotions, but a lot of people don't have that chance to step back. So if you're someone that's privy to feedback from your friends, family, influencers, and you're like, oh, that sounds like a good token. I'll buy Hex just because Richard Hart looks like he's riding on the roof of a Lambo. I'll get that because that looks good. If you're privy to that, you might want to consider putting your emotions on the sideline and then using bots. So I'm not saying that bots are perfect and they're going to be perfect every single time, but the thing that I like about them is that I have a trading team. I have the bots that are running different strategies for me. Like I just said, like they've probably opened up a short, but I'm on the stage talking to you.
Without going into too much detail on the algorithm itself, tell us about the criteria that you put into the algorithm.
So it depends. I mean, it's very flexible. So the bread and butter that I have, and I'm priming myself the sideline for a wins from these two, but I actually favor DCA bots.
What is that?
No wins. That's pretty good. So a DCA means dollar cost averaging.
Okay.
So essentially you are risking a little bit of capital to start a trade, and then when the price goes down, let's be realistic, because it's crypto, when the price falls down at set increments, it's going to buy more as it falls. So this, logically, it doesn't make sense, but mathematically, it wins, as long as you follow proper DCA strategy. And I know from Gareth, because I follow his signals on Verified Investing Crypto, this is what he does. He scales into his positions, and I'm sure Florian does as well, because they're intelligent traders. Before bots, I would just go, oh, I'll put some money on this trade, and I hope it works. But the nice thing is that I can allocate a set percentage of my portfolio, however much I want. And then of that, I can assign those funds to spread it out between 3, 4, 5 bots. And those bots will run. They'll run without me knowing it. And I'll just wake up to profits. And it's this really amazing feeling to say like, oh, I closed the trade overnight and I didn't even know. Like, it's a nice feeling.
Florian,
So I'm not a fan of scaling in. I'm a fan of scaling out.
Sure, fair enough.
Okay, tell us about the technical indicators you look at.
I think that's where you make the money. It's your exits, not your entries. So we have a strategy called quad exit strategy, where you take rather quickly 50% off the table, which already puts you in a winning spot, or at least decreases your risk. You're mitigating risk, and then you take another 25% if the trade runs in your direction. And then you are in a beautiful psychological situation. The last 25%, we call it the runner. You can let it run basically, theoretically, forever if you caught a trend, because you have taken out risk, you are in the money already, and you can give it room to breathe. And the psychology part is the most important part in trading and investing. And I'm a discretionary trader myself. But I believe strongly scaling out is much more important than scaling in, because martingale strategies usually are dangerous, especially if you are in a multi-month bear market. You accumulate a big losing position.
Depending on what starts the trade, yes. I'm not advocating for, I don't have my bots generating trades. I don't do high frequency trading. My bots are very selective about when to start, because I'm not going to buy at the top and just buy. It doesn't make sense. So I agree with you. Yeah, and also scaling out, 100%. Valid advice, because you want to secure profits. It's one of my trading rules. Be satisfied with any amount of profit, because if you don't have those profits, you don't sell. You don't have anything to show for it. You just have the tokens still.
It's much easier to manage the trade, the remaining position, if you have already taken some money off the table. If you're already feeling like a winner, it's much easier to let the rest run basically much higher. Otherwise, if you have a big position or whatever large the position is, and you try to catch the whole move, it's basically impossible, psychologically speaking. So I strongly believe in taking profits. Scaling out is much more important for me.
Interesting. All right. I do have one last question before I open the floor, so I'll let Gareth answer this part of the segment here. You told me a few weeks ago when we spoke before Dubai that you sensed the panic. That was on a day when the S&P dropped 2%, the NASDAQ a bit more. Okay, so when you sense the panic, in your words, when VIX is spiking on a day like that particular day, how do you deal with it?
So I'm a big believer in contrarian, right? So when everyone else is freaking out, that's when I'm buying. The term "blood in the streets" is a stock market term, and that's exactly what you have to do. So I'm big on psychology, like you guys. You have to be able to read other investors. The charts help you do that with technical levels. But to be honest, I use Twitter now. I use Twitter as a great technical, emotional indicator.
Contrarian tool?
Yeah, absolutely. So I'll post something on Twitter, and I'll see how many people attack it. The more people attack it, the more I buy. And I would say
go
it's
attack his
a
Twitter
90%
right after
success rate. I mean, it's unbelievable because what you're doing is you're gauging the public, right? And it's nothing against the public, but the public has in many ways been brainwashed, and they don't have the emotional control to kind of understand that the institutions are going to push you, right? So at the end of a run, like think about Bitcoin in 2021 when it was breaking those April highs in October and November. Notice, number one, the volume was dropping. You had negative RSI divergences. Technically, it was a double top. I mean, there were so many signals, but you know what? They were launching the futures ETF right there. Huge bullish, pumping going on. Then we actually had this conference, so there was so much hype around that. It was all the signals that were getting the last few people that were sitting on the fence to jump into Bitcoin. Like if you were kind of skeptical, that emotional craziness pushed you over the line and got you in the trade. Well, guess what? If you get everyone in Bitcoin that wants to get in, who's left to buy? And that's how tops are made, right? So now you start to see the legging down on it. So anyways.
We could keep talking for hours, but we're out of time. We have time for one or two questions, I believe. All right, this gentleman has his hand up here.
Hi, everyone. Thank you so much for this presentation. Really great. I have a question about DCA. There's some people that say that DCA is a myth. Because there are times where you should actually ape in, and there are times where you shouldn't actually just invest despite what the price of Bitcoin is. So, Aaron, you mentioned DCA, you have DCA bots. So the question is DCA a myth?
When you say ape, you mean go all in, right?
Quite a sizable
Heavily.
amount.
So there are trading groups, and they're like Telegram groups and stuff called like the Ape Club. So no disrespect to other mammals, but I mean, apes are what? They're mostly aggressive, right? They're the men, like they're the pack, the silverback. They're not making the most intelligent decisions. Sometimes it is appropriate to act, but I never risk more than 10% of my portfolio. And even with bots, it's using a sliver of that. So I understand what you're coming from, because the impatience that we get in moments like this where Bitcoin's doing this, we're all on the sidelines, essentially. We're waiting. But the danger is that when you get impatient and you decide, whatever, screw it, I'm just going to get in right now. I mean, who's to say if it keeps falling? You don't want to go heavy in on any position, because if you do, there's an expectation that you have. It's backwards. You're looking at the market like it's an ATM, and it's not. The market doesn't like you. I like you. The market doesn't care about you. I care about you. But the market is a bunch of people. It's a bunch of participants, and it doesn't matter what you feel about the market. If you hear good news, great. But scaling in, like these guys are saying, beats aping. There are moments in time, though, like these guys will probably tell you, that I believe like after the halving for Bitcoin, that's the time where you can start to distribute your portfolio and hold. That's my plan. But right now, Bitcoin dancing on this line is not a great time to be more invested. Like Florian was saying, he's on the sidelines completely. You go ahead, guys.
No, I was just going to say, just going to say, I'm a big DCA guy. I've never had a higher winning percentage in trading than since I started dollar cost averaging in. And the reason is, so I'm a technical guy. So there are factors in a chart, whether it's a bottoming tail, a gap fill, a double top. I mean, you could just go on Fibonacci. And I look for 2 to 3 factors to get me in a trade. All right. That means that I'm going to have a winning ratio, calculated probability of success of 70 to 80% when I have 2 to 3 factors. That still leaves the chance that there's about a 20 to 30% chance that I'm going to be wrong and that chart is going to go lower. So what do? Is I go in, and this comes from experience, right? I've traded for 20 years. I have lost many times on trades. And when I go in heavily, that's the time that I'm going to lose, right? And so I mitigate that risk. As a trader, you want to mitigate as many risks as you can. And by going in light, number one, it keeps my emotion at bay. Because you know what? If I put in $1 million in this trade, I'm going to be like on pins and needles. Like every uptick and downtick the market is going to use that against me to potentially get me to do the wrong thing at the wrong time. When you start small, if it goes against you, no emotion. Okay, where's my next technical pivot point with 2 to 3 factors? That's 80, 70% success rate. At some point, one of those levels, even if one fails, the probabilities mean that at some point you're going to get that bounce. And the best thing is having that dollar cost average low enough, right? Now, in a Terra Luna scenario, there's nothing that's going to help you there. If it's going down, it's going down. So you want to have a maximum exit. But for me, anyways, dollar cost averaging has been a gift.
How are you doing on time? One more question. Yeah.
How about to do it dynamically, the DCA? Like put more in when it's going lower.
Well, yeah, that's the martingale strategy that I use. So I double down, just like the poker player martingale. But I understand what you mean dynamically. I would love to find a platform that intelligently DCAs. Fixed DCA mathematically works, but not all charts act the same. So a dynamic DCA that would move and continue to buy, if the chart all of a sudden has another 3% drop in one candle on the 5-minute time frame, then I don't want to buy more. I want to wait to see about this bounce first. So dynamic DCA, there are many trading platforms out there. I personally use 3 commas. It's not the only one out there, but it's one that I've learned like the back of my hand. But dynamic DCA is a smart idea, and we're going to see more of these ideas come out as time progresses, because people are going to get frustrated or impatient, or they're going to see a better way to do things. Yeah.
One quick question, one quick comment on aping in too is like a lot of the times when we get that emotional reaction to ape in, that we have to recognize that it's an emotional reaction, and that may be something that we want to be very aware of. For instance, I'm a big, your bot trading is awesome because you don't use emotion. I have trained myself for 20 years to basically be emotionless in trading, and so you have to look at everything on a square kind of peg. There's no such thing as an easy lunch or an easy millionaire, million making opportunity. And any time that I think it's the no-brainer, could it be one of those situations where the institutions or someone's pushing that to trigger that emotion in me to try to ape me in?
All right. Did you have a quick question?
Yeah, quick question. What is there are obviously a lot of principles to trading. What is one principle that you want to share with us today?
Florian, you haven't talked in a while. Go ahead.
Well, I think the most important and most basic principle is buy low and sell high, right? There is no other way to make money in the market. Even if you are shorting, you basically just change the order. You first sell high and then buy low back. So that's the most important principle, and you have to understand it. And obviously, it sounds maybe a little bit too simple and easy, but to figure out when to buy low and when to sell high is the big question, and that's a personal thing because it depends on your personality, on your trading investment approach, on your time frame. A long-term buy and holder investor has a totally different understanding of low and high than a day trader who's looking at 1 and 5 minute charts maybe. So that's a personal thing, and it all comes back to what Gareth basically said before. It's all about experience, and that means screen time. You need to spend a lot of time in front of the markets and just learning and seeing things, understanding what's the right approach for you personally, what does fit to your personality, to your personal lifestyle, to your environment. Do you have a normal work life, 9 to 5, then you cannot be a day trader. If you have 2 kids running around, it will be already very challenging. If you have all the time for yourself, yes, you can do day trading the whole time. So there's a lot of factors that you have to consider. And in the end of the day, it's buy low and sell high. That's the principle.
I love that. It's so simple, yet you'd be surprised at how difficult that can be, right?
It's super difficult in practical terms, right?
Yes. I have 2 things. One would be the main job of a trader, an investor, is to protect your portfolio at all costs. That means using a stop loss and not wincing. You'd rather get stopped out than keep a loser unless you know DCA and you trust it. So protecting your portfolio at all costs is important, and be satisfied with any amount of profit. Even if it's a minimal, nominal, even if it's actually a little bit of a loss. Gareth talks about this in his courses, but changing your mindset about trading is really important because our expectations dictate, well, I'm going to be a millionaire. I want a Lambo like this guy does. But really, we need to learn how to be content. And when we end up in profit and the price goes up higher, and you kick yourself, oh, it went up so much higher. Man, you steal that joy. You steal that sense of accomplishment, and that's no good. You really need to learn how to be satisfied with any amount of profit. That's important to me.
Okay, we got to end it there. I've been told recently that the key to a happy relationship is to have low expectations, to Aaron's point. So change your expectations for trading, and maybe you'll be better. All right.
Just one thing, if I may, David. Okay. I'm going to be back here doing another talk at 3:45, so come on back at 3:45.
All right, gentlemen, thank you very much.
Thank you.
Thanks.
All right. Hey, man. Thanks. Hey, man. Good job. All right. I got to run.